Hello investors, welcome to Business Learnings. In this video, we are going to analyze IDFC First Bank. The bank recently announced the results of quarter 1 financial year 2022. In this video, we are going to analyze it in the next 10 minutes. And towards the end of the video, we'll have some idea on what are the pros, what are the cons, the good and bad thing about the company, and whether we should be maintaining our positions or selling it off, buying more, what exactly should be our action. So make sure that you watch the video throughout the end so that you get complete understanding, and do subscribe to the channel. So scrolling down, the first important slide that I come across, this is the investor presentation that it has recently launched for its shareholders, recently published for its shareholders. uh, what we see is the guidance provided by the management in December 2018, and for most of the guidance, the company is on track. The capital adequacy ratio has been increasing. Everything looks on track. The only concerning thing is the gross NPA numbers and the net NPA numbers, which have been increasing, which has increased a lot in the last quarter, in the last 2 quarters. And the reason for that, we'll discuss it in the coming slides. It is the exposure to some of the infrastructure loans which have gone bad. Everything else looks perfectly fine. The good thing is the net interest margin. Even the likes of HDFC Bank and Kotak Bank, they have net interest margin between 4 to 5%, and this bank here, IDFC First Bank, it has already reached 5.5% of NIMS. The reason being, even after they slashed their savings account interest rates, the deposits have not gone down, right? So that's a good thing. Again, the point on capital adequacy ratio, it tells you how strong a bank is to be able to handle the stress caused by the loans. During these COVID times, a lot of loans are going bad, so capital adequacy ratio becomes a very important metric to look at. Now, the bank had a CET, capital adequacy ratio, of about 15% a quarter ago, but recently it raised about 3,000 crore rupees. The problem that I see here is when a bank raises money through QIP, it means that institutional investors are invested in the bank, want to invest in the bank, therefore they believe in the bank, but it eventually dilutes the holdings of every other shareholder. For example, like us, uh, our holding in the bank, our ownership in the bank got diluted, which means that it pushes down the share price. So while I understand the intention of the bank was good, it eventually did not good for us as a shareholders in terms of the short term price movements, right? Next is the NPA numbers across categories. If you see the retail NPAs, they are almost consistent. Recent increase because of the second wave of COVID, but the infrastructure loans, they have increased a lot. Infrastructure NPAs, they have increased a lot, and the key reason here is the NPA percent mentioned above includes one. So all these, in the next few slides, I'll show you what all loans that have gone bad in the infrastructure segment, which is causing such steep rise in the GNP percentage. See, the GNP percentage was about 5.76, and it went up to 15.65, which is unacceptable, to be very honest. So so this is because of the additional provision that the bank has created for COVID second wave. And notice that they have clearly mentioned it's not COVID provisions, it is COVID second wave provisions, which means that the third wave, which is already picking up in some of the European countries and the US, it might eventually come in India, and there will be probably another round of provisions for them. So the stress in the banking sector is here to stay, at least till the time the COVID subsides or becomes the new normal, right? The good thing that bank has mentioned that the bank is confident of improving asset quality over coming quarters, but again, this is subjected to how the third wave of COVID unfolds. Highest ever core operating profits posted in quarter one financial year 2022. Strong NIM improvement. Agreed to all of them, but again, uh, again, what ultimately matters is how much profits the bank is able to maintain, generate at the end of the year, right? So operating profits don't matter. Pre-provisioning operating profit doesn't matter. What matters is the net profit. Now, scrolling down, I'd like to highlight a very interesting point. The incremental NIM in retail lending is about 9.5%. So imagine the kind of growth in NIMs, the margins this company might see. Uh, there are two kinds of loans. First are the retail loans, and second are the wholesale loans. In wholesale loans, the probability of going bad, the diversification risk is very high. The reason is you have several key players, several key entities, businesses whom you have lended your money to, and even if one of them defaults, you are in big trouble because that represents a bigger portion of your asset. The the same becomes an advantage in retail lending because retail lendings are small ticket items and they have very high interest rates. For retail lending, businesses, banks charge a bigger interest rates, and that's why the margins are much better, the risks are much lower. The only problem is in the COVID times, businesses and retail people, individual people like us, all were equally impacted, and that's why all the banks have their performances down, and this stress is going to be there till we get much clarity. Now let's move on to the financial performance. Yes, before that, a very important slide on the number of credit cards just launched in January 2021. The bank has already reached to about 3 plus lakh credit cards. The good thing is the market is consolidating. HDFC cards is banned, Citibank is out. A lot of other players are also facing regulatory problems. A good opportunity to grow, in my opinion, in the credit card market. Now, coming to the stronger slides of building a strong retail deposit base. Retail deposits are 78%. Good thing. Uh, the key thing to notice here is that in the past few months, the bank had slashed on the savings account interest that it provides, but still, people have not moved out their money from their fixed deposit and savings current accounts from IDFC First Bank, which means that people have trust in this bank. The amount of deposits has not gone down; it has actually increased, and that says a lot about the confidence people have in this bank, right? So this will keep on increasing, and the performances will keep on increasing. Another good thing the bank has been doing is the granularization of customer deposits. People who have deposits of more than 5 crore, the number of such people are being brought down, so that again, uh, to bring down the diversification risk. If limited number of such people withdraw their money, the bank has to arrange for such kinds of funds. Similar is their pattern in the lending side also, the asset side also. The bank has been reducing the big borrowers concentration, which means that shifting from wholesale lending to retail lending, and thus diversifying away the risk, right? Because we have people like Vijay Mallya who and Nirav Modi who keep on defaulting, and ultimately the money goes from the shareholders, the taxpayers of India. Now, this is the list of stressed pools, the wholesale lending book, which has gone bad. And you see the provision coverage ratio, PCR, is about 67%. Of all the amount that is at risk, it has provided a big PCR percent of 67%. This much fund is already kept aside, assuming that it will not come back. But the bank is confident that it will be able to recover most of it. So that's a good thing. Moving on to the income statement, the provisions have increased to about 1879 crore rupees, and that's the big negative for me. So this was all about the bank. Everything else mentioned in this slide, in this entire presentation, is just vanity. To sum it up, it's good for long term, but there might be some short term pains in the end, not just in this company, but in the entire banking industry till we get clarity on how the COVID third wave unfolds. So, Thanks a lot for watching this far. I have been reducing my stake in IDFC First Bank for disclosure purpose, and see you in the next